I'm Chris DeNunzio, a research analyst on the global listed infrastructure team. And today, I'm going to talk to you about the energy transition and decarbonization related opportunities that we see in GLI. I'll begin by addressing the infrastructure subsectors with the most exposure to renewable energy, and I'll then speak to the economic and political drivers that are catalyzing the energy transition. First, with regards to subsectors, there are three main infrastructure subsectors that we think stand to benefit the most as the world transitions to green energy: yieldcos or developers, offshore wind, and electric utilities. Starting first with yieldcos. These are the developers of large-scale wind, solar, and battery storage sites. Yieldcos sell the power that they generate to customers, typically utilities or heavy commercial or industrial users, under long-term contracts. They are tax-efficient vehicles that could be some of the biggest winners as the world decarbonizes. Separately, offshore wind is poised for robust growth in the coming decades. The industry is still in its nascency, but recent tax incentives have improved the competitive positioning of offshore. We're monitoring close to 30 gigawatts of potential offshore wind projects that could come online off the US East Coast alone over the next 15 years. This will create substantial growth opportunities for offshore developers. Lastly, we see electric utilities as an overlooked beneficiary of the energy transition. Not only will utilities end up being the largest owners of renewable assets, but they'll also need to upgrade the electric grid to integrate and accommodate all of the new renewables. Much of this investment will take the form of transmission to connect new green energy sites to the grid, or grid modernization to upgrade aging electrical infrastructure. These investments will drive a long runway of lower risk growth for the electric utility industry. In addition to having exposure to renewables, these subsectors all share common characteristics that we value in an infrastructure business. Things like long-term contracts or regulated revenue with monopoly or monopoly-like positions in their respective markets. Next, I want to shift gears and discuss the economic drivers that we're seeing for the energy transition. The reality is that the levelized cost of energy of wind and solar is now largely competitive with traditional fossil-based resources, even on an unsubsidized basis. That means it is often a cost-effective solution for generators to decarbonize. Much of the cost difference stems from the lack of fuel expense and limited maintenance expense associated with a wind or solar asset relative to, say, coal or natural gas. Shifting to green energy has always been good for the environment, but it's now also becoming a driver of lower customer bills. Lastly, I want to speak to the political support that we're seeing for renewables. In the United States, that support is manifesting itself at both the state and federal level. 74% of US states have some type of renewable requirement in place, and several legislatures, including Washington, Oregon, and Virginia, have recently signed landmark pieces of legislation to increase the adoption of renewables. At the federal level, we've long been of the view that clean energy is more of a bipartisan issue than appreciated. In fact, there was constructive renewable legislation signed into law in December of 2020 by President Trump. That said, we clearly think President Biden will be more supportive of the renewable industry. The administration has already proposed extending renewable tax credits, adding new tax credits, imposing a clean energy standard, and increasing support for the electrification of buildings and transportation. The Department of Interior has streamlined the permitting process for offshore wind and set new offshore wind targets, and the EPA is seemingly becoming more aggressive in the regulation of coal-fired generation and water standards. But decarbonization is a global phenomenon. For example, Europe, China, Japan, and Korea have all set net zero emissions goals, and in some cases, we think have aspirations that will ultimately be more ambitious than what we see from the Biden administration. In conclusion, decarbonization will touch virtually every area of GLI, but we see yieldcos, offshore wind developers, and electric utilities as having the most exposure to renewable energy. There will be bumps along the way, but the energy transition is very real, with strong political support and compelling economic drivers serving as catalysts. Thank you for your time today. We look forward to keeping you updated with our thoughts on clean energy going forward.